Today, folks, we're diving into everything tonight. We're pulling the veil back on your deepest and darkest comments on my videos because I see all of them out there. We're going to talk about the Canadian economy for the degenerates that think the entire thing is going to come apart with thanks to our terrible politics, which I still continue to see comments about. But we're going to talk about dividends, Meta, Google, just about everything on this Sunday night that you degens take the time to join me on this incredible financial journey. We shall be known as Degen Nation, baby. We must follow our master, the degenerate clown on the internet until I die. Also, is your opener for every video exactly how you opened your magic show? More or less. I yell a lot. I'm very exaggerative. It kind of pops the mic. I mean, I'm always adjusting the levels when I'm screwing around in my editing software on the back end here, guys. But before we get into the deepest, darkest parts of my soul this evening, I really want to break down in a very elementary way what degeneracy is to me, because I think it's a fair conversation to be had that is largely skewed because risk in and of itself is a perspective. It's not something that I think a lot of people come to understand, and it takes a lot of time. And this is how you basically are going to inevitably get rich in the market. So we're going to draw a little line here because this is my degen line, right? On the far left here, this is where you have your full-blown degeneracy. And I know this is like grade school drawing here, but bear with me, guys. I'm using a mouse for crying out loud. And then on the other spectrum of this scale, we probably have what we'd consider lower risk, smarter investing. I don't think smart's the right word, but we'll just put smart here nonetheless. So on the full end scale degen side of this, we're talking about your yield max, your yield max options, which I'm just going to put yield max for the fun of it. You're talking about your meme coins. You're talking about full blown gambling, like the fullest spectrum of I'm either going to like 1000x my money or I'm going to completely get destroyed. On the smart spectrum, or the less degen side, we'll call it, you're talking about bonds. I mean, we're talking about high interest savings accounts, things where you can't really lose your money unless the entire economy collapses and the banks go broke. So, I mean, there's risk with everything. There's still risk over here in your savings account as well because the bank's loaning your money out. I mean, the bank's not just letting your money sit there. They're going to take some risk with it, put it into some credit cards, some mortgages. Nonetheless, the government does, offer some security and regulations around this. So this is the safest side of your spectrum, but this is what I call the risk chart, because understanding risk is understanding your degeneracy and where degeneracy makes sense, right? So when you're building a portfolio at the end of the day, I think this is what most people lack in understanding, because I see a lot of older people. I've seen so many people out there, people that go 100% options, like those option ETFs, people that are like over leveraging in Tesla, but they're still buying safe ETFs, but like half their portfolio isn't like an individual stock. Like these are the people that I don't think have come to understand the reality of this line that we're looking at here, my spectrum of degeneracy, as I call it. Because in the midst here, I mean, in between risk, like, degeneracy and smart, on the other spectrum here, you're probably going to have things like your ETFs, right? Like these are your globally diversified, your S&P 500, like your tried and true, worked for over 20 years. That's more toward this side of the spectrum, right? This is what we know works over long periods of time. It's never failed. I mean, eventually it probably will. The economy will completely collapse. Sure, there's going to be an end to everything in life. Just let's hope it goes on for a little bit longer than the end of our lives, ideally, but there's no guarantee, obviously, right? I mean, we could go full-blown Great Depression at some point, but crossing my fingers, we're going to be living over here and things are going to be great. And then obviously in between here, this is where you're going to have your individual stocks. This is where you're going to be looking at things that come with a lot more risk than people might be aware of, but your stocks, maybe your Bitcoins, anything that you're buying over here that comes with market risk, right? Like individual market risk, where individuals become the defining factor to how greatly insane the movements are going to be in that holding. Now, typically when you're living on the left end of this spectrum, you need to be very careful what you're doing here. Because you go all in 1 or 2 or 3 or even 5 stocks and you just have the worst luck in the world. It doesn't take a lot for this to completely ruin you. We're not going to be living over here, guys. We don't do yield max. We don't do the degeneracy side. Try and stay away from the meme coins. We're not gambling at the casino right now, right? We're just trying to figure out where we want to live within these spectrums. And the idea is the path of least resistance to early retirement, the path of least resistance to building wealth. I think what people don't understand, what I try and get across on this channel, is we're all doing the exact same thing. And a lot of people think because they're making money, they might not be doing something wrong, or it's been working for them for whatever. And I just think sometimes stupidity, like, when you see like young animals, like animals are dumb when they're young. I think a lot of young investors are dumb. A lot of people that are new to investing are dumb, and they don't understand the risk of this side of the spectrum. And sometimes they hit it big and they think things are great and they keep doing it. They're kind of like your almost like your meme coiners out there, like your Dogecoin millionaire, like willing to ride it, stays in it, loses it all. Like the volatility is maddening. It's not a good place for most people to live. Most people want to live on this side of the spectrum, but where you really fast track this, right? Because this is for most people that don't know what they're doing, the path of least resistance to wealth building, globally diversified portfolios. You're trying to build up, the biggest nest egg possible. You don't care about dividends. You shouldn't care about growth. You're looking for a combination of exposure to the best possible businesses in the world, because that is your path of least resistance to building your nest egg, your retirement, your wealth, right? But sometimes very few people, and obviously in this market environment, it's been a lot more people than a few, but usually in the market, there's this little thing here in the middle that I like to call the risk of combination of just knowledge and understanding, right? Like risk is a perspective of what you know. Because obviously we know ETFs are safe and individual stocks come with risk. That's just obvious, right? But what's not obvious is, where do you work? What do you do for a living? What do you understand about your reality that the market just doesn't understand about the current valuation of a business? Because that's how we've been getting rich on this channel from the day I started it, from the very first day I ever started investing. I understood this very well. And it's worked to my favor a lot, because I've recognized that anybody I've ever met that has made a substantial amount of money in the market did one thing that nobody else did. That was that they just knew something. They understood a sector. They had knowledge like Warren Buffett, and they just recognized the market didn't. And the 2020, when the markets tanked, guys, you could have just bought the market, sure, but you should have went double X leverage into oil ETFs. I mean, let's be real. Oil went negative. I know people that became millionaires coming out of that oil crash. I mean, I made my first big win off the marijuana boom back in like 2018 when I started investing in like 2014, because I recognized the market wasn't valuing the legalization that was inevitably coming. So you can find stocks that, though might seem risky to the market, if you have knowledge, they might actually live over on this spectrum over here, right? And this is what I call things like Google, when the entire world was saying Google was dying. Google's going to lose out to ChatGPT. It's going to steal market share. And guess what? That did not happen. And that has been obvious for the last 3 quarters, but only obvious to the rest of the market for the last 2 quarters, or at least quarter and a half, right? So this little chart here, I just want to let it bake in. So let it bake in a little bit, baby, because a lot of people are going to tell you they're smart. A lot of people are going to tell you what they're doing is a good idea. 9 times out of 10, it's usually very stupid if it's not broader-based market ETFs, bonds, savings accounts, and a diverse portfolio of all of these combined, depending on where you're at in your investing career. Because if you're younger, you want to try and live a little bit more on this spectrum, because you have time, you can afford a little bit more risk. You're buying your NASDAQs, tech stocks, whatever. You don't want to be chasing the yield max and the meme coins. That's too far on this end of the spectrum. You want to live right here. That's where you live if you're a bit younger. If you're a bit older, you want to live over here because you've saved up your nest egg. You don't want to put it at risk. That's the wealth preservation side of it. And I hope this makes sense, because we're about to get into some pretty heated conversations here, ladies and gentlemen. We'll start off with some of the most vicious comments of the week, because I do get them and I get it, guys. I know what I'm like. I'm a clown. I act like an idiot on this channel, and I want to state this over and over again. I live on this channel as though it's going to die tomorrow, as though YouTube or China, like they just did, is going to come down with a gavel and hammer, and they're going to say, no, you are not a licensed financial advisor. Get the hell off this platform. Unless you can prove to me your license, I don't want you spitting this garbage out here. So, I mean, that could happen. It just happened in China, right? So I'm living in this realm of, though this channel ends tomorrow, I'm also living in this realm as though I'm an entertaining clown. I'm like, there's a filter between what I'm doing here of like half truth and half exaggeration. So just keep that in mind as we move forward, because this comment, I think, exemplifies the insanity of what I live with. Kyle, it's clear that your channel has become more and more about you and your ability to come across as condescending, self-absorbed individual. I'd like to say you're wrong, but you're absolutely not. I act like a condescending, egotistical, exaggerative clown. That's what I do on this channel. Probably not to my own benefit, but I do it anyways. There's a reason why others in this field have lots more followers and success. Damn right there is. The Caleb Hammers of the world, the Graham Steffens, the Meek Kevins, the Amid Investing. There's so many of them. It's because they're authentic and relatable. I am, semi ADHD, OCD, autistic, I don't know, maybe unrelatable, but regardless, I mean, you offer no value to everyday investors. You're too busy bragging about things that were basically more luck than brain. I used to think it was more luck than brain, but my God, after over a decade of having just endless luck, something tells me there's some kind of magic to this shit. It's not just luck. I used to think it was luck, but I'm like, man, and when you keep catching baggers, it starts to feel a little less like luck and a little bit more like strategy. We're based, anyways, your ridiculous promotion videos and now your thumbnails and clickbait. Desperation, baby. So I will say I do take on a lot of promotions on this channel because I believe this channel might not exist sometime in the future. And I recognize that I can live in both worlds of being able to talk about companies, whether I would buy them or not, and getting paid to do so. I don't have any issue with it. Now, there's periods where I do that a lot more, and there's periods where I do it a lot less. It's a business. There's cyclicalities to it. And yeah, I don't know. It just is what it is, because obviously I want to get my bag on this channel. It's the only reason the channel exists is for me to make money. It is my job here. And if I wasn't making money and I couldn't make this my job, we wouldn't be making these videos. So to keep that in mind, you don't have to watch the videos you don't enjoy. I always find it interesting on YouTube how people will come on and complain about what I'm doing, but it's like, you don't have to watch this. It's like you're choosing to watch it. Anyways, it's hilarious. And the clickbait. Can I just answer the clickbait? I freaking love, at the end of the day, I'm an artist. Like I love just being silly and engaging with people. And AI has just made that easier by a few metrics when it comes to being creative. And I like messing around with clip arts, and like I love how easy it is to like adopt AI into like my silliness. And I enjoy making like the clip art for this channel. It's really not me like grinding, trying to get more views. Like at this point, I really don't care about getting more or less views. I don't care if you subscribe. I don't care if you unsubscribe. This channel could go to 0 tomorrow. It's like I don't live my ego through like my viewer base at all. It doesn't give me any more fulfillment. My wife does, my family does. This is just the job to me for entertainment value, but I do love you guys. Don't get me wrong. There is a sense of there's people on the other side of the screen, and I've met many of you over the years. Regardless, my clip art has nothing to do with anything other than my pure enjoyment of just making silly things on the internet. And yes, I feel like AI is going to take our jobs eventually, but at least I can enjoy this glimpse of AI before it ruins everything for me. All right. So let me have my clip art, for the love of God. Just let me have it. It's hilarious to me that you try and sell yourself as Nostradamus because you hold Google and Meta, but you have a very small holding in both. I mean, define small. I mean, to some people, $1,000 in a stock might be a lot. Between my fiance and I, we have 6 figures in those 2 stocks, and they make up like somewhere between 15 and 20% of our combined accounts. For me, that's a lot of risk. And for me, that's a lot of money, a lot more money than I ever used to have. So to each their own. It's even more funny to hear you just sweep NVIDIA under the rug, as it's not an amazing stock to hold. And it has changed so many people's lives simply because you missed the boat on it and you're envious. I will say, I never felt envy from, is there any stock that I've actually felt envy from missing? I like being a part of things, but as I've aged, I don't really care all that much. And every single day from like the day I started investing, I was always told, you're going to see 1,000 things go right, but it doesn't mean you're going to capture one of them, right? Like you really just got to play in your own batting field. And investing is like an internal game. It's not like, oh, that guy made money on gold. That guy made money on Palantir. That guy made money on NVIDIA. I shit on NVIDIA a little bit because I'm worried about it. There's risk to it. There's a lot of risk to it. I mean, let's be real. There's risk to every individual stock at the end of the day. And I just don't understand it. So yeah, it would have been great to be a part of the thing. Actually, you know what? I am a little envious of here. I figured it out. Okay. So if you go back and you watch the videos, I bought Taiwan Semiconductors before this boom happened, and I sold it because Warren Buffett bought it and then sold it within 1 quarter. Like he didn't even hold it for a few months, and it scared the living crap out of me because I'm like, what does this billionaire know that I don't? And I actually sold Taiwan Semiconductors before the AI boom. So I'm a bit envious of it because I was a part of it and I missed it. Like I recognized that it was there and there was value to it. And I got scared out of it because of other people's investing strategies. So lesson learned, right? I mean, it could have went the other way though. I mean, you never know. Like I can't look backwards and be like, oh, I missed that. Like it's so hard in the market. You don't want to be envious in the market. It'll absolutely destroy you if you start chasing stocks. Don't shit on others who own it. I'm going to shit on everybody. It's half the fun of my channel. I'm a troll. I grew up in a troll generation. I just love trolling people because this comes out of it. The beauty of the comments, the beauty of the insanity of it all. People just taking this way too seriously, like way more serious than I do. This video was another clear reminder of why I stopped following you. You came back though. You need a massive slice of humble pie. Make content that actually informs you. You want a piece of humble pie? Get on a plane and go to a third world country. That'll humble the shit out of you. There ain't nothing you can do in the stock market or on this channel that'll humble you more than seeing how the rest of the world lives. Anyways, making content that actually informs and helps others instead of using the space to dedicate narcissism. So here's the thing when it comes to informing people on YouTube, and I'm going to give you a little bit of insight here on how this platform works and how all social media works. You are being fed what you engage with. Social media at this point has just become a reflection of your own interests. So when people get too political, I know why they're getting political. It's because they just keep watching that shit on TikTok, on Facebook, on YouTube, and it keeps feeding it to them because they're engaging with it, right? You engage with the stuff you want to see. So the reality for us as creators is we get to see what you're watching and what you're eating up. So we tend to not make content that's necessarily in your best interest. For instance, I don't think going into meme coins or crypto or a lot of crypto or, yield max or even going all into option ETFs are that great of an idea. But other people are going to tell you it's a great idea and they're loving, they're not going to tell you it's investment advice because clearly that's not what we're here for. We're all a bunch of idiot clowns, but they're making that content because they make money off of it. I make dividend stock videos because you guys watch that more than my other content. I try and do some diversity in between, a little bit of like personality, a little bit of theater, a little bit of everything, just so I can keep mentally sustaining this insanity. But the reality still stands, guys. Like, you're not going to be that educated on YouTube anymore. It's very, very hard to find like real education. And usually you do find glimpses of it off some channels here and there. I just try and be transparent because if you can see what I'm doing, you see the actions that I take, no matter what I say, you can at least see behind the veil and be like, okay, this guy's bullshitting this, saying that, blah, 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 blah. But there's his portfolio, right? Like, at least he's showing us the numbers. I can show you the returns. I'm not lying about anything. So you can just say, hey, maybe you can get a piece of useful information from it. I don't know. But you have to recognize to an extent, like, this channel is a business. YouTube and social media now is a business. It's not a place for people to just post funny cat videos anymore. Even the cat video people are posting to make money, and they're posting in between AI cat videos now. It's all a mess of just trying to capture your attention, and social media platforms have gotten damn good at it. So if you're getting all riled up from the shit you're seeing on TikTok, it's because you're engaging with it. You're watching it for too long. So find something you enjoy that's a lot less depressing, and you'll find very quickly social media becomes a lot less depressing. But thanks for your comment. I did rather enjoy this. So I will do my best to make more informative videos, and I'll try and find some humble pie. And we'll see if I can slim Jim down on the insanity of my brain. First, buy Meta and Google, then buy Meta and Google, then finally buy Meta and Google. Is anyone else seeing a pattern here? I made a joke that it works, though. This guy immediately replied and said he's not trying to be like a smart ass. He's legitimately saying that this is a working strategy for you. What is funny is the buying the Meta and Google. I've rotated around on these stocks a lot because they're the only stocks I truly understand in my spectrum of risk. These are stocks I feel a lot less risk about buying because I don't understand anything else, guys. So when I see Meta just tanking for no reason that makes sense, I'm going to buy it. It is Google. If I can understand what's going on because I live on the platform of everything Google does, then yeah, I'm going to buy the Google when it makes sense to buy the Google. But I can't be smart about everything here, folks. What's the cool video? Love the thumb. Can you say a few words on why you choose VDY instead of VCN? Keep rocking the great content. Yeah, this is a good comment, and we can dive a little bit into this. A lot of people keep getting confused on why I don't buy like a broader Canadian index ETF, and it's because for the most part I do not like the broader Canadian markets. They should actually start to outperform VDY. VDY and VCN have actually been performing quite similarly, but the reality is with precious metals there's bigger exposure in something like VCN than there is over VDY, so I wouldn't be surprised if that continues to rally, that VCN doesn't start to surpass VDY. But let me just kind of give you an example of these two ETFs, and I'll tell you why I don't buy the broader Canadian markets. Firstly, expense ratio is like non-existent. Dividend, is 2.38%. It's quite a bit lower. I mean, obviously, it's quite a bit lower. The 5-year annualized return is disgusting. It's been 18% a year. Insane. 10 years been around 11.6%. Since inception, about 10.5. Last year's been exceptional, around 28, right? Like, we've been seeing some pretty great returns in the last year. Regardless, this is giving you market cap weightings and higher valuation stocks. Because if you take a look, the only thing I don't like about this ETF to some extent is it's a lot more expensive than the US counterparts. Like a lot of people think the S&P 500 is expensive, but the growth rate you get with the S&P 500 to a major extent is a lot higher than the Canadian counterparts, because the average price to earnings ratio is 19.7 on this fund, but you're only getting an earnings growth rate of 14.2%. Now, keep in mind, it's very likely that that's going to go up over time because earnings are increasing quite dramatically across the board. But again, we'll see the difference with VDY, right? But again, you're getting very large exposure to the financials, the mega tech companies. You're getting Shopify, Royal Bank, Toronto Dominion. Some of the miners are now working their way up, like Agnico, Canadian Pacific Railways in here, Kansas. The other railway is probably just below here somewhere as well. But regardless, you get the idea, right? Market cap weighted ETF, Canadian economy. Comparing it to VDY as an example, though, and why I prefer this ETF is you're paying a little bit more on expense ratio, 3.53% dividend starting right now. If we take a look at the returns, the last 5 years have been 20.79%. So the last 5-year returns have actually been higher still than that of VDY. 10-year been around 12%. And since inception, it's been around 11%. So everything's just a bit higher on the longer run of things. And you can see that you're getting a price to earnings of 14.5 times, and you're getting an earnings growth rate of 13.4%. So you're getting a much lower price to earnings multiple, but almost a very similar growth rate. So this is when I'm looking at, I'm also a bit of a dividend guy too, right? Like I want dividends in my portfolio to an extent. I think balancing out growth and dividends, again, building a well-diverse portfolio includes encapsulating some of this. So I love this ETF because I get exposure to the companies that I want exposure to, and I'm getting it at a much better valuation than I am on the broader market. Because the problem with the broader market is I personally don't like Shopify. I don't like Canadian software companies. They're incredibly expensive compared to a lot of US software companies. So I personally, even though I use Shopify, I don't know if it has a moat. I don't know, what stops Google from making an AI that just shits out websites. It's just a highly competitive industry I don't want to be a part of, right? But you still get Royal Bank, Toronto Dominion, and Bridge. So I'm getting a concentration of the stocks that I prefer while increasing a yield. So it's apples to oranges though, right? Like if you just want broad exposure, don't buy VDY. It's a very concentrated ETF. I wouldn't make this like 50% of my portfolio just because it's too concentrated. But regardless, I mean, this is why I chose this over the broader Canadian markets, because I already own a lot of growth and I wanted some income and stability. And this ETF should offer more income and more stability because these are more foundational, recession-proof, grandpa stocks that have been around for the last 50 plus years that have good history and track records of sustainable dividends. So it just kind of gets rid of that scratches my back, that monkey off my back, just to get some income coming into the portfolio and offer a bit more stability. Regardless, I'll answer some of your comments and questions in a minute. I just want to get through a few more of these. Enjoy my Meta Ray-Ban smart glasses. About to buy the new Gen 2 models. Congrats, my friend. I've never bought them yet. I wouldn't mind trying the displays when they come out with the second generation. But what I do like seeing is Meta Ray-Ban has become very popular recently. They're going to be very hot over this holiday season as it looks. I mean, they're not flying off the charts on Google Trends, but we are still at historical highs. So people are definitely probably looking at these for holiday gifts. Which makes me feel good about the next Meta earnings, of course, and when they update us on what's going on with the Ray-Ban. So congrats to all of us that are holding Meta long. Feel good about that one. Love your videos, but I don't know about, I love your videos, but I don't know about you, but my confidence in the current government is shaky at best. Not sure what's going to happen for the Canadian economy, accounting tricks in the budget and using our pension as leverage for food bank usage. No bueno, in my opinion. So again, here we go, guys. We're going to take off the financial cap and we're going to put on the economic cap. Get ready for the next clown tomfoolery. I think people have to realize their own ignorance. This comes back to the point of the flat earthers of the world, right? I love talking about this shit on this channel. It's fun to look at a chart and say, oh my God, there's $7 trillion in cash in money market funds. That could balloon the market when they cut interest rates. I don't know, but it seems like a simple idea, but does it actualize that way? Why is there that much cash sitting there? I mean, 300 billion of it is Warren Buffett's. I don't know. Is it all the insurance companies? I don't know. I mean, I don't know, right? But what I do know is that this media game that we all play is sensationalizing the shit out of everything. You just don't watch political media. I get it. I don't like the Toronto mayor. I met her. I'm not a big fan of what's going on with some of the things and the policies. I get it. I do get it. But like at the scale of it all, like what I find really funny is I was watching a TikTok today or yesterday about just Canada's GDP. And it's just funny because we don't have a lot of GDP growth. But unlike the United States and any other country out there for that matter, Canada has the lowest net debt to GDP ratio of any G7 country, according to recent reports. Canada's net debt to GDP is projected to be around 13.3% in 2025. Significantly lower than any other G7 nation out there. To put it in context, Japan apparently has 48.7%. And you know what's even funnier is the United States reportedly has a net debt to GDP of 119% in the second quarter of 2025. They put more money into debt payments than they do, I think, the National Army spend or some shit like that, which is, by the way, the largest expense you guys have in the United States. So like, I know a lot of people like to shit on Canada, but like, you know, it's funny when you actually just, again, we're talking about debt to assets, right? Like when you go and get a mortgage, this is what we're talking about. GDP is gross domestic product. Like how many of us are moving goods around, you know, doing sales and earning the government money? That's your GDP, right? So when GDP slows down and you get 2 consecutive quarters of negative GDP, you're technically in a recession, right? The economy is contracting, people are spending less. We want people to be spending more because if they spend more, we have a better credit rating and the government can borrow more money to continue to expand the economy. If you expand the economy, more value gets created, which continues to expand the better future for all, and the government makes more money to pay back the debt. The government is just a business like any other business. And Canada, of all the businesses, considerable countries of the G7 nations, we are of the lowest debt to GDP. So, I mean, like, we're not like the craziest of spenders, though, like the entire media likes to make it out to be. I just thought this stat was hilarious because somebody was on some podcast and I saw a clip of it on TikTok where this guy was just reaming the government. And he's just like, you know, we're like the least indebted nation comparable to like our country's spending, right? Like it is kind of funny. Technically a recession. We all know they will change the definition when that happens. Yeah, I know, right? Regardless. Anyways, let's get through a few more of these real quick because you guys are hilarious. What are your thoughts on Netflix? Oh, Netflix. You guys watch there's been a lot of good shows coming out. I mean, Stranger Things just came out. Frankenstein was incredible. I actually finally like earned respect for a movie that I grew up in that generation of theater, but I really loved the idea of just people that make actual things and innovate and just be creative with it. Again, like I like, it's like my Zelda mask up here and I have my zombies Juggernaut mini fridge down here. Like I like when people make cool things. And at least with Frankenstein, like they actually made a lot of the sets. It's a very beautiful cinematic movie. I really enjoyed it. It was really great. But Netflix in and of itself, I've talked about this a few times, and I'll try and give you a perspective if you really like the company. Again, I'm a guy that is a sole believer that YouTube is like the absolute premium streaming business anywhere. Like I think YouTube is going to dominate everything eventually. It has to because the business model is superior. Netflix and like just you go back to any kind of movie and production company, they all have the same problem. And that is that entertainment is very cyclical in nature, right? And YouTube seems to have solved that cyclicality because you like seeing what your creators are doing. I go back and watch creators that I grew up watching when I was like 13 and 14. Like I still watch people like iDubbbz and I watch the drama of H3 podcast. And, you know, I like the creator clash that just kind of dumped that. Like I'm thoroughly involved in like my generations of YouTube influencers, right? So like that has some kind of crazy sticking power. My fiance, she watched podcasts in the background while she works during the day. A lot of people go into finance YouTube. Like YouTube has just captured so much without having to put any capital up front. They just do profit sharing, right? So Netflix, Bell Media, you name any media business, Crave, Amazon, they pour billions of dollars into this. So I just want you to understand the risk of these companies and what they're trying to do. Now, Netflix, again, I'm not saying they're a bad company. They're doing a great job, but they are expensive, right? Like they're more expensive stock than Google and Meta and a lot of the companies out there, but they can justify it to some extent. It's not a cheap stock by any means today, but let's just talk about the revenue earnings, what's been going on here, because they're doing good. I don't use Netflix anymore ever since they cracked down on password sharing. I kind of just deleted the account. Unfortunately, I left the Netflix during that purge. Because when I couldn't share it with my parents, I just said, forget it. Might as well just pirate this stuff. Let's be real at this point, considering like the ripoff these companies have become these days. It's funny too. You can't really pirate any YouTube stuff, can you? I mean, people go on the web and pirate just about anything, but no one's pirating anything off YouTube. I guess the big thing with pirating on YouTube is ad blocker. I guess ad blocker is the sole pirating idea behind YouTube, maybe. But regardless, look at the revenue growth here. They did a great job at increasing prices. They're getting user growth still. I think one of their dominated user growth areas right now is the UK, the US. Engagement remains healthy. We hit the highest quarterly view share ever in the US and the UK, which has seen growth of 15 to 22% respectively since Q4 of 2022. According to Nielsen and Barb. So the reason that their earnings plummeted here, like their growth, not their earnings, their revenue was great. I mean, the revenue growth in the mid double digits, that's phenomenal. The operating margin dropped pretty significantly down to 23-24%. The reason their operating margins have tanked like this is because their net income, is unfortunately being involved in a lawsuit, I guess, with the Brazilian tax authorities. So they're claiming that's what's affecting their Q3 and their Q4 here. But they're saying otherwise they would be fine. So clearly whatever they're dealing with is costing them a shit ton of money. But regardless, the growth is here, right? So, I mean, once we get through this Q4 forecast, they should be doing pretty good. So you could be a good buy the dip opportunity here if you believe they can trade at a 40 times multiple into the future. I don't know. I don't like the media business behind Netflix or Amazon. I think they're very corrupt businesses. It's like Disney. Disney, when that person signed up to the free Disney Plus and their wife died at like some restaurant and they weren't allowed to sue because Disney Plus, when you signed up to the free version, waived all liability on any parks or like any Disney locations. These companies have just become endlessly corrupt. It's like them putting ads in, your car. I mean, there's a guy that was just talking about that, the stupid ads in your car. I mean, everyone's just getting so greedy. It's horrible. I'm kind of getting tired of it, to be honest. Netflix used to be great. I think those used to be great platforms, but unfortunately people are lazy. They like overpaying for subscriptions. It is what it is. Remember when Netflix was physical DVDs, rentals crazy? Yeah, I know, right? When you used to rent movies and stuff was wild. You're an ad block. It's such a hypocritical thing too. When you run social media businesses, but you got ad block on your browser. Adrian is just using a different strategy. There is no one way to invest. I beg to differ. I honestly think. I think investing roughly boils down to the same thing always. You want the biggest bag possible while taking on the least amount of risk as possible. And the problem with the covered call clowns is somehow in their mind, they've diluted their risk down to thinking that income removes risk. And they think having to sell stocks is risky. Like the stuff that they use to equate to why they have their portfolios is somebody that just, I don't think is adjusted to the proper way of investing. Because again, guys, I want to boil this down to fundamentally as humanly possible. You only do covered calls if you really think the stocks you're buying are like, the only strategy for me that makes sense is if you think your stocks are overvalued. If you think your stocks are overvalued, sell covered calls. If you have too big of a position, you want to level it down, sell covered calls. If you were really worried about downside risk and you think covered calls protect you, they don't. If you wanted to protect yourself, go do puts. Write puts on your stocks, guys. That's how you get downside protection and collect cash flow. That's what you would actually be doing. Like these guys, I don't need to shit on Adriano that much, but I don't know. He's not the only guy. I've listened to all of them and they all just spew the same weird shit. And it doesn't make any sense. Because if you understand covered calls, it's dumb to make an entire portfolio of them. It just doesn't make any sense. And there is no one strategy. Just because you're making money doesn't mean you're doing the right thing. You might be taking on more risk than you think you are. Because again, you're giving up the upside of the best companies in the world. Why would you write covered calls on Google? Like, again, it's stupid. You could have made money on the covered call Google ETF, sure, but you would have made way more just buying. It's the same thing with the banks. Like, if you're going long a sector, you don't sell your shares when they make money, guys. That's what you're doing with covered calls. Here's a little shiny object today, so I can take all the big gains from you later. It's like the guy that was talking about the lottery ticket, like with Misty. It's like you're literally giving somebody the right to buy your lottery ticket when it wins. And that person has no downside risk of that lottery ticket. I don't know. I feel like I argue this way too much, but I feel like you guys just don't get it. And again, I think investing is the same. I think it is the same for every single person. It's just how you want to play the spectrum to get to that path of risk, right? That path of least resistance to either wealth preservation or growing your wealth. Because at the end of the day, the bag is all you got. The dividends don't matter. The growth is the same thing as the dividends. They're all just returns from a company. And you're so focused on this little bag that you're not talking about the company. You're not paying attention to what the company's doing. You're not trying to get exposure to the best companies for the long run, not the short run. If you're writing covered calls, you're short-terming your thinking. You're not long-terming your thinking. I'm just saying. Don't be stupid. I joined late. I'm about 10 minutes behind. I kind of disagree about older investors. I'm around the I in risk on your diagram. Also disagree. You don't prove value. You don't provide value. You ground us from the Adrianos. Well, you showed up at the good time because that seems to be the conversation we're having now. Standard of living in Canada has dropped 40% compared to the US in the last 10 years, thanks to Trudeau and Carney. Yeah, here's the funny thing, right? Standard of living, man, it's a tough debate, because the problem with standard of living is you have to compare it to a normal like income bracket. And it's so hard in this market environment because unfortunately we live in a world now where you have to become part of the investor class. Capitalism naturally starts weighting toward the most value. So if you don't provide any value, when capitalism was booming after the war, everything was valuable to the economy. Manufacturing, cars, everything required like labor and value. So that back then that had high value because that was the infrastructure being built out. Grunt labor was worth something. But now we're moving into a world where automation is taking over grunt labor. Higher value of education and implementation of systems has higher value than the grunt worker at McDonald's. So yes, the value chain has changed, and that is just a natural mechanism of capitalism. So unfortunately, you need to be a part of investing. First of all, like that's the only way you're going to escape that. But secondly, in Canada, there's a lot of rich people here. And I think people keep forgetting that is that like there's a big divide between the rich and the poor, and its divide is getting bigger, unfortunately. But Canada has a lot of rich people. Like, housing is expensive for a reason. It's not because of people like me and you, right? It's because people with a lot of money can come in and dump $4 million into a home. And I know people right now that are buying $4 million homes in cash. That ain't me or you, pal, but there are a lot of people in Canada that can do that. And they, are changing the living standard here, unfortunately, right? So, I mean, again, if you're younger, you got to be scrappier, you got to be smart. Unfortunately, that's the way the world's headed. It's a survival game here, guys. Life is not fair. You just got to wake up to the reality and smarten up because the economics are a bitch. Like the economy is a bitch. You just kind of got to be malleable, right? Do it while you're young because it's real hard to do this shit when you get older. Real hard to do that stuff. But yeah, I work at Rogers and we give free subscriptions to Apple TV, Disney, and Netflix, all with ads. Streaming has become everything TV was and what streaming was supposed to get rid of. Yeah, I mean, that's how everything starts though, right? So I thoroughly enjoy VR right now because it seems like the early day and Nintendo 64. And I really enjoy things when they're in their purest form, when it's not about just making money, because that's when you get like the most value out of something, I think, from like a personal enjoyment standard. And that's what Netflix used to be, right? I mean, Amazon is a joke now because they already put ads on everything. But I mean, yeah, I mean, Netflix in the early days, premium, it was gold over traditional TV. But now everything's kind of moving in that direction, right? So unfortunately, yeah. Is there anything else in the world right now that's kind of like in its prime where it's not ruined? I feel like VR is very pure. I think what else is there? Do you guys have anything in your life that you're thoroughly enjoying right now that hasn't been ruined by capitalism because it's still too early days to worry about money? It's not like Apple, right? Like Apple's gotten, what's really interesting to me? Microsoft has got more greedy than Apple is. Like, man, Microsoft, I use a MacBook and a Microsoft, or I have, Windows on my other laptop. And man, it tries to sell me on everything. Game Pass, like it's constantly promoting me shit. And I fucking hate it. Meanwhile, my MacBook doesn't complain about anything. It doesn't bother me. It just works. It does what it's supposed to do. And I feel like Windows is getting ever greedier, man. Like ever since they bought their gaming divisions too, I hate them for it. What is the market's doing right now, by the way? Pre-market's not looking too hot. I mean, we're seeing some red now, guys. I think the don't let me reload that. I almost closed out my streaming here. Let's just reload this real quick. What are we at? Yeah, it looks like pre-market's not that hot right now, guys. We're seeing the NASDAQ down almost 0.75 of a percentage point because crypto's tightening again. So I still feel like we're in kind of as much as like the safer investments are going up and precious metals are going up, guys, I still feel like, we're in kind of this adjustment market right now into the end of the year because yeah, Bitcoin selling off again, people using this as an opportunity to take more profit. So, we'll see what the market's open like tomorrow, but I still feel like we're in this kind of tumultuous water into the end of the year where people aren't sure of what they're doing or the risk. And I really hope this continues because, man, like I said, I'm a guy that I prepare every day for it. I'm mentally prepared. Like I wouldn't mind if my portfolio dropped 50%. And I think what freaks people out is mentally they don't realize how quickly that can happen, and it's going to happen again at some point in your lifetime. So I mean, like, I think the only thing that gives me back onto like my risk assessment here, guys, is that like most people just don't understand this. They don't get the risk of what they're doing, even buying ETFs a lot of the time, guys. Because even though we're playing over here a lot of the time, you got to be prepared for the inevitability, right? And that's why most people, I think, would be more comfortable with more bonds and savings, because you can still get really good GIC rates right now. You can still get like 4%. And I think a lot of people never sit there and actually ask themselves, could I really risk seeing my portfolio drop 40, 50%? Because trust me, baby, that reality is going to come. You better be prepared for it. Could we take just a second to point out the laugh at all the Misty investors? I try not to. They get mad at me now. Everyone hates that I shit on the covered call guys too much. But yeah, I mean, that was an inevitable explosion. A lot of people, it's really sad. I will buy Bitcoin at 80K. I keep debating on buying it because I don't know, man. I don't like non-productive assets still. I figure once my mortgage is paid off, that's a non-productive asset. Why would I want to buy Bitcoin when I still haven't paid my mortgage off? So my focus will be on the real estate first. Once that's paid off and my tax advantaged accounts are maxed, which mine are almost maxed, the wife is going to be the next focus. I'll probably start piling my money into her TFSA sometime next year. But once our TFSAs are maxed, once the mortgage is paid off, then I'm like, look, then I'll be a degenerate. Then I'll buy gold. I'll buy non-productive assets like Bitcoin. I have a little bit of Bitcoin and a little bit of Ethereum right now. It's very incremental. I mean, it's not a huge, it's like less than 1% of our portfolios, but I just own it, just keep my eye on it. But I don't know. I want to be like smart about what I'm doing. So I try and, I just don't like non-productive assets. I just like knowing that like somebody out in the world's making iPhones and like it serves a purpose to our reality. Right now, Bitcoin does not serve much of a point. If Bitcoin went to zero tomorrow, does it change or the outlook of your life? Not really, unless you're just bag holding it, right? I mean, it's not really integrated into the system at all yet. I was really hoping, blockchain would really be a lot farther along than it is now. And it's just not. Genuine question. Why would you prioritize mortgage over higher returns from the market? Because higher returns from the market are not guaranteed. The bank can call my loan whenever they want. That's a reality that exists. Unfortunately, not that it's going to happen. We're not going to head into another 2008. I doubt that, but you don't know that at any time. I know a lot of people have that debate all the time, guys, and it just depends on your personal risk tolerance. Like I said, I've set out goals a few years ago, and I've almost reached them, and that is my financial independence goal, and I should be there in the next 1 to 2 years. Presuming the markets don't tank, right? But in my mind, you get $1 million in the bank, guys, and a paid-for mortgage. What more do you need in life? Past that point, like I don't have to worry about job security or anything. So I don't know why some people can live with that stress of having a mortgage, though. I know a lot of people that do it. I hate it. Like you understand, like when you're going into a partnership, right? And people like just somehow feel comfortable doing it with real estate. But unfortunately, the other partner has more rights than you do, even if you own the majority stake of that property. It's not like a stock. I guess Dave Ramsey says, like, the borrower is slave to the lender. I don't like TD, my mortgage provider, in my back pocket all the time. I don't like that I have to check their fucking interest that I pay them every friggin' month. I don't like seeing them make money off of me. Because again, like it's just, I hate it so much. If you owned rental units, there is a case to make sense of a mortgage. But if you are outright owning a property that you are living in as a house, a mortgage is just stupid because you're not making any money off that property. All the money you would be making is going to your interest and your sunk cost. I mean, you're just losing to like phantom costs all the time, right? That's why it's always dumb when someone's like, oh, like maybe in the Canadian economy for the last 15 years, you made money on a house. But if you just bought a house and it went up 50% over a decade, you didn't make any money. Like you really didn't make anything because like all the money you lost on interest, the repairs, the HOA, like you're not making money on the property. The only reason I own this property and the only goal this property has is to reduce my monthly living expenses. It was cheaper at the time for us to buy a property than it was for us to rent. If I pay this property off, do you know the cost of living for me to live in Toronto goes to? Like nothing. Like Like literally, it would be the equivalent of us. Like, I think our cost of carry, everything in, is like 14, 15,000 a year without a mortgage. I'm like, you know how cheap that is to have a property, a place to live for like around 1,000, 1,200 a month. That's crazy if we own the property, right? So I don't want a mortgage. I hate it. I hate it with a passion. I'm mortgage free and love it. Actually, almost 1 in 3 Canadians are mortgage free. Did you know that? A lot of people want the Canadian housing market to collapse, and it might, depending on how it works out. But the fact is a lot of people outright own their homes. And yeah, I mean, it's the greatest feeling in the world. You don't have to deal with the third party. That's the problem with Google, right? Like, look at Google. So when it comes to the bank, you have to answer to the fucking bank, and they're assholes. They're just assholes. Like, let's be real. They want your damn money. It's the same thing with a stock. Like, when you own a stock, Google answers to me. I am the tippity top of the ladder when I own shares in a company. You understand that, right? I get voting rights to who's in charge, who gets to control the company. I am the tippity top. That's where you want to live, is up here. You don't get there by having other people own your shit, unfortunately. Too much dirty money in Vancouver for it to collapse. I know there's so much drug involvement and like money laundering. It's funny that TD got caught, and my CFO buddy laughed because he's just like, I've talked to a few people that worked at TD, actually, not my CFO buddy, but one of my family cousins works for TD, and he says it's just funny because they're all how do you know somebody's laundering money until they get caught? You don't. But they're going through every bank. It's just that TD got screwed over. 40% of homes in Vancouver are mortgage free. Exactly. I mean, like, a lot of people don't have mortgages in Canada. It's kind of crazy when you think about it, really. My God, there's been a wild conversation tonight. Oh my God, I watched this financial clown. Does that make any financial sense? You are better than that guy who promotes nothing but covered calls and moved somewhere sunny. Oh my God, you guys, I got to stop talking about Adriano. I think he hates me. Probably hates me. I'm 100% on Google. You guys are the worst. Anyways, folks, what an interesting conversation to be had as we head into the holidays. I will remind you, things are going to settle down for a little bit here. I'll be taking a break probably into the new year. Regardless, we'll try and keep some fun content. I've been making some Christmas specials already just for the sake of having something to post. But TD got hit with more money laundering. No, nothing outside of the old fine. That's old news. I'm sure there's still people laundering money through TD, though. Let's be real. But I do appreciate you all, and I hope you enjoyed my insanity and my spitballing today. And yeah, we'll see if the markets continue to treat us as well as it has. Because again, like, I can be over exaggerative, guys. I get it. I know, like, when I make money on this channel, you can go back and look at any of my videos, and people always say the same shit when I get like over exaggerated about the money that I'm making. But again, like, I'm not doing anything special. And now a lot of people are, even in my real life, are kind of treating me a little bit differently. And I think it's hilarious because they think I'm like special or something. My ego, trust me, it does not, in this exaggerative theatrical world, can be very exaggerative, but in my real life, guys, I don't give two shits about this, like, to any major extent. I love stocks. I love the passion behind it. I love investing. I love inspiring others to invest. But again, I'm not special. I never made more than 40 grand a year, 50 grand a year for most of my life, guys. I didn't do much. I just bought stocks. If you bought real estate, if you bought stocks, if you did any of that for the last 15 years, you didn't buy anything too stupid, too degenerate. And even if you bought some degenerate shit along the way, you probably did pretty well, right? So I'm not that special. I'm just trying to inspire you guys to realize that. And I hope you realize that you can do exactly what I'm doing. And yes, we all love money. That's what we're doing here. So I'm hoping you figure your way through this risk assessment and you get yourself on the path to financial independence. And I hope one day you get to retire early. Like I said, it's not fun unless everyone else is getting there too, right? Like, I wish the best on all of you guys. So stay cool, stay awesome. Yes, I'll talk about TELUS soon. That's an interesting debate in and of itself for another video. And as always, I look forward to catching you in the next one. Peace.